Peter Benjamin, president of ACUMA, joins us to tackle industry topics like construction, green energy loan products, and ACUMA's role in helping credit unions stay competitive. Peter shares his experience and insights on dealing with regulatory challenges and the opportunities for credit unions in construction lending.
How can we modernize and bring credit unions a little bit forward when it comes to technology? I think there's plenty of opportunity where 20% of your volume could be construction and renovation. Affordable housing is such a big deal, and that's why credit unions need to pay attention to it. We are community-minded. If anyone is going to solve the affordable housing crisis, it's going to be a credit union.
I'd like to welcome everybody today to the Construction Lending Podcast. I'm your host, Sean Ferris with Land Gorilla. Today we have a very special guest, Peter Benjamin, the president of ACUMA. And Peter, welcome to the podcast.
Sean, thank you very much for having me.
Now, this is great. We're going to just jump right into it because one of the questions that, or actually one of the revelations that I've recently had is not about construction lending, not about credit unions, but how to pronounce ACUMA. ACUMA is the correct pronunciation, not ACUMA, correct?
Correct. That is correct. So it has been the greatest debate since I've started. I've always called it ACUMA. I don't say I grew up when I came into the industry calling it ACUMA, but it was such a great debate whether we called it ACUMA or ACUMA that we actually polled our members 2 years ago at our annual conference. What do you call it? And it would actually, the winner came out as ACUMA. So we go with ACUMA. We call it ACUMA at every event, all of our publications, ACUMA, ACUMA, ACUMA. So it started off as an East Coast, West Coast thing, ACUMA versus ACUMA. So it's ACUMA.
Oh,
The way I kind of frame it up is, think about the car brand, Acura. It's basically spelled the same exact way. You're just substituting one letter, right? But kind of think about it like that.
Well, I feel much better now that it was a widely sought after debate to figure that out, because probably for the greater part of a decade, I would say ACUMA, and then somebody corrected me and I was like, man, you're crazy. Absolutely crazy. We've been calling it like this. Nobody's ever said anything. So makes me feel a lot better. I had a big argument with my son last night, and very similar situation. He came up, Dad, I want this shirt. Will you help me order this shirt online? I want a Stussy shirt. And I was like, Stussy shirt? You mean Stussy? Like the 80s, 90s brand Stussy? He's like, no, Dad, it's called Stussy. And I'm like, no,
That hurts my heart.
it's absolutely Stussy. And I even drew the little logo for him just to make sure we were talking about the same thing. And he's like, Dad, how did you know how to do that? I'm like, oh man, every binder I had in middle school, elementary school, high school probably had that logo handwritten by it.
I actually feel like a pain in my stomach just hearing that.
Yeah.
Like that hurts so bad.
Doesn't it?
It really does. It really hurts.
I think I got him on the right path though.
Okay, good. Good. Thanks for setting him straight. I appreciate that.
And for all those chiming into the podcast, I know we're a little off track, but ACUMA, why don't you go ahead and tell us a little bit about what ACUMA does and what your role is over there?
Sure. I am the president of ACUMA. We are an education-based trade association focused on supporting credit unions and the mortgage divisions within each. We put on a handful of events throughout the course of the year. And again, all education focused. When you think of trade associations, you typically have advocacy-based trade association, you have education-based trade associations. We solely focus on education. How can we educate our members, which are credit unions and the mortgage lenders within, and how can we educate them throughout the course of the year? Again, live events, virtual events, various publications. Again, we want to be in front of our members throughout the course of the year. And, honestly, I think we do a very good job. I have a staff of 5, including myself. It's tough to compete with what we do, considering how small the team is.
Mm-hmm. And what would some of that education sound like? Give me an example. I'm the audience is your customers. I want to say your customers, your members,
Yep.
credit unions, and they're out and they're hungry for this information. What kind of knowledge are they out there seeking?
It varies. Sometimes, we put out once a month, we put out something called our policy insights. And it's really just like, an executive summary of a various policy issue that could be front of mind, right? Uh, Sticking with like the insights topic, it's a blanket term that we use for a publication that we put out. We also put out, Washington Insights, which could be, the things that we hear in the halls of the Capitol, right? It could be a quick hits 5-minute read of various things that are impacting or could potentially impact our credit union members coming out of DC. Those are just simple things, right? But then we put out various webinars. We have two webinar types. We have fast tracks and inside tracks. Fast tracks are just intimate conversations that me and that I have with subject matter experts on various topics. It could be compliance. It could be a hot topic, anything underneath the sun. Again, it's intimate conversation. But then we have our inside tracks. Again, curated content with subject matter experts. It can range anywhere from this is how you structure construction loans to this is how you set up a servicing portfolio. When you look at our live events, we have our workshops, which are 2-day events, and they are deep dives into everything underneath the sun. Anything from economic updates, policy updates, to how to keep loan officers during troubled times. I mean, really, 2 days of mind melting content. Our attendees, when they leave our workshops, are just exhausted from just the content. Really, they are. It's just a lot of information over 2 days. We have our summits, which are honestly relatively new to our association. We started them last year. We're quickly becoming probably my favorite event that we do. We start off the day, just some structured content. We do an economic update, a policy update, but really the rest of the day, and it's a 1-day event, but the rest of the day is just round table discussion. Just about 6 hours of just open discussion. And you honestly, you leave there inspired. Credit unions are notoriously known to be open and caring, and there's just this sense of collaboration and community. And I've yet to see or attend one of these summits where our attendees just don't leave there inspired. And so these summits are quickly becoming my favorite event that we do. And then our last one's like our showstopper, our big annual event. It's just 4 days of fun and great sessions, great speakers, your standard annual conference. So we keep busy. But and of course, we also put out our own podcast, put it out every other week, the On Point podcast.
That's awesome. Love the annual. I think that's the one of the fun and exciting ones to look forward to every year.
Thank you.
And around on the education side, what are kind of the hot topics right now that credit unions are interested in? What do you?
I think liquidity is a big topic. It's for credit unions. I think thinking back to 2020, 2021, the early part of 2022. Historically, credit unions have always had that fear of selling loans in the secondary market out of concern that they would lose that member, right? Yeah. Or maybe it was, just not having the right products in place, right? Whether it's construction loan or, the right outlet for their products, right? So they kind of retain that 3% paper, that 2.5% paper, and they just never sold it off. Right. They didn't have that outlet. And so right now there's a lot of liquidity concern. So we're having those discussions, internally with our members. So we're having those discussions. Of course, employee morale, now that volume is slow, we're having those discussions. Of course, we're talking about purchase business and how to grow it. And I think you and I can agree, it's not just this year. It's not just next year. It's really the several years to come. It's going to be a purchase market. So it's how do we continue to focus on purchase business and get our employees focused, but also keep them motivated to go get that purchase business. We continue to talk about product development a great deal. Um, and that's it. I mean, it's the common themes that you hear across the mortgage industry of how can we stay focused and well, I mean, I guess modernize credit unions because I hate to say this about credit unions, but credit unions tend to be one or two steps behind when it comes to modernization than when you look at a bank or a non-bank mortgage lender, an IMB.
You see.
When it comes to technology innovations, the BECUs, the Mountain Americas, these are ones that are adopting technologies because they are passionate about serving their members, they're passionate about mortgage, and they want to compete in their local markets. So it's again, I think it's a common misconception. I truly do.
Is it more of a fear by leadership bucket, or is it more of a resource issue? You think that some credit unions tend to be smaller, right, on the
Yep.
asset size. So
Yeah.
you think about those asset size, what the credit union profile may look like. It's not like they have a bank of product development people or a whole. When I mean bank, it means like a bench of legal experts or compliance. They don't have those types of resources. An Encompass administrator, on staff. They probably have to work with a consultant. Is it a resource thing, or do you think it's a leadership thing?
I don't think it's a leadership thing. I really don't. I think there's always the desire and the want.
Mhm.
I think does boil down, especially when you look at the smaller credit unions. It's strictly based off of resource, right? It's oftentimes yes, credit unions do focus a lot on consumer, right? And so because consumers, consumer loans like auto loans, credit cards, often do drive, where that core system goes and whether or not that mortgage LOS is compatible with their core system, which does drive efficiencies, right? I think that's part of it, right? It's not a fear. If they had the resources to go get an Encompass, which really does require that Encompass administrator, right? Just using that as an example, I think they would go get it. But not every credit union can afford that Encompass administrator because that does come with a large price tag, right? Um, but I honestly believe that that a credit union that is focused on mortgage and dedicated to that mission of putting families in homes,
Mhm.
they're just going to go do it. Like they really will. And it's not a leadership thing. It's just they're strapped by the resources that they have.
And how much, when we think about, your role, not you personally, but, the role of the organization, how can you help them lean into technology? It sounds like there's a lot of education that can assist them, but I mean, you don't get in there and say, hey, here's how to do this in Encompass. It's more kind of higher level and outlining a plan. And
No, I think that's fair. And it's a fair question. Because I think I've been president of ACUMA for at this point in time almost 2.5 years. I think we've done a very good job in this time of highlighting new and exciting technology providers
mm,
that we feel as an association can provide a competitive edge to our credit union members, right? Whether they're small or large, various sizes, right? Not just going to fit in a box. Um, that honestly we feel will provide that competitive edge, right? It could be an LOS, it can be a point of sale, it could be a member retention tool, right? I think we've done a very good job of bringing them front and center, and highlighting them for our members and giving affiliates and Langdale is an affiliate of ACUMA, giving you an opportunity to kind of be a little bit more front and center than what was done in the past.
mhm.
We want our members to know who you are and give you an opportunity to share your knowledge a bit more. Because if a member doesn't know who you are in what you're capable of and how you can support them, they're never going to have that opportunity to even look at you, right? You're not going to get that first pass. And for us, for ACUMA, and the way I kind of view it, I want to provide them, my credit union members, with the best in the industry, because I feel as though if they have access to the best options that are out there, I'm giving them the best chance to be as competitive as they possibly can in their markets.
You mentioned a little earlier, kind of, some of the hot topics were liquidity,
Yep.
morale.
Mhm.
What is as they kind of prepare for the future, product development wise, what conversations are being had, or what conversations are an interest in being ready for the future? As Fed came out this week, they're not going to change interest rates. So we're going to probably go the course at least the year, really kind of flat on interest rates where we're at, which creates its own issues in demand for financing and housing right now. How do you prepare them for what's in store, get them ready?
I mean, it's tough, right? It's tough when they still can't figure out how to get rid of this 3% paper, right? I mean, right now, I think they have an angle, right, to kind of refinance this 3% paper to higher interest rates, and so we're discussing that. There's a lot of interest in construction and green and green loan products. Actually, the past two workshops that we had a workshop in June, we had a workshop in May. Construction came up in both of them. I think there's a lot of vested interest. And so, our workshop in June was in Denver. Our workshop in May was in Nashville. And they tend to be, the audience or attendees in each tend to be somewhat geographically based. Especially in Denver, that audience very much was, I'm gonna say Colorado, that mountain time zone area. So a lot of people were wanting to know and discuss construction, which I found very interesting. Nashville very much was pulled from that southeast area, which was odd because Nashville tends to pull across the country because it's Nashville, right? Nash Vegas, and depending on what you want to call it.
I haven't heard that one yet.
You haven't heard it? No, now, yeah. You're welcome. You're welcome to that one. So I found that interesting that particular event pulled mostly from the southeast, but construction as a whole was a big topic. But also green, green energy, green type of loan products were a hot topic.
Yeah.
And so it again, but it wasn't so much, a GSE type product. It was, how can we develop something like this internally? Has anyone had success putting together a portfolio product that was green, construction, energy efficient? What can we do? And so I think credit unions are starting to become extremely vested in this idea of how can we kind of start investing in building more affordable housing that are green in our areas. So, and it makes sense in Colorado, right? Because that's kind of like a green area, right?
Yeah.
The Southeast kind of took me by surprise, though, a little bit. Just kind of sit back. And whenever at all of our events, we always tend to have roundtable discussions. We carve out about an hour to 2 hours out of all of our events. Might be an hour one day, an hour the next. And I always sit back and I don't participate. I'm more so just sit back and listen. I just take notes. I was kind of just blown away in some of these conversations, and really interesting to hear that they're moving the needle on these.
And before we get too far down the line,
Yeah.
why is construction interesting to them? Why talk about construction now? What do they see the opportunities with offering construction programs to consumers?
So I mean, keep in mind, I mean, a lot of the credit unions in attendance were from major metropolitan areas.
Mhm.
Um, I think when you look at major metropolitan areas are landlocked, right? And so when you look at landlocked metropolitan areas, you have one or two options, right? As a consumer, you either go further out or you tear down and rebuild, right? And as a lender, you either provide one or two options to your members, or as a credit union, you either provide them with the option to renovate and rebuild or rebuild, or you let them build from the
Yep.
ground up, right? And so I think that they are struggling for purchase business in my mind. And so this is the next logical step. You know, I don't know if their members are coming to them and asking for this. One note that I did take was that a lot of credit unions are doing lot loans. And if this happens to be the next logical step in that evolution, maybe it is. Maybe they were just testing the waters with the lot loans and said, hey, okay, well now we're doing lot loans. Why lose the lot loans and let's just start building loans on these lots that we own? Maybe that was it. But that seems in my mind, if I'm just a fly in the wall, which I tend to be, the reason
I,
for this.
yeah, I think what I hear is that it's very member driven,
Yep.
right? And then it's almost kind of a fear of missing out or a fear of losing their member to some sort of competitive solution, right? I don't want the member going across the street to, you know, ABC. We don't want to lose them that way. And in order to remain competitive and, you know, serve our members, we have to serve up some sort of construction program, you know, some sort of renovation. We have to have solutions there, or we lose the member, or we're not in the right place, or we're not setting ourselves up for um, what's to come. And that sounds like, you know, exactly what they're experiencing. Like the thing that really was interesting, what I want to know is the word green keeps coming. You know, number one, what do they mean when they say green? You know, and then why now? You know, what is driving that part of the interest?
Well, so the note that I took was that energy efficient refinance. That was a question that popped up, right? That energy efficient renovation refinance.
Mhm.
I forgot that part. So I'm guessing someone wants to put on a solar panel,
Mhm.
right? Something like that, right? And how can they do that? So whether they are tacking that on to a renovation loan or part of a construction loan, that tend to be a big part of the questions that were being asked.
Mm.
No one could answer it. No one in those audiences had a good answer for it. But it's a question being asked. Um, Especially when you look at other things that are happening when you look at um why am I blanking on it? You know, some of the things that happen with solar panels and the other liens that possibly could go on title. I think it's a good solution to kind of get away from other consumer type products that or consumer loans that possibly could go on, we'll say unsecured liens that could possibly go on title in front of a mortgage lien.
Could be dangerous.
Could be dangerous.
Could be real dangerous depending on your state.
Yep.
What do you think? You know, as we flash forward, and what happens if a credit union doesn't offer a construction program or renovation program? You know, well, let's flash forward a year or 2 years. You know, can they be competitive? And with this massive demand for housing that we see, interest rates go down, and you know, we see a huge rush of activity to purchase existing housing stock, build new. Like, can you even be successful without those programs?
Could they be competitive? Yeah. Are they going to be missing the boat? Yes. 100%. Right. The problem is that, again, credit unions are already 2 steps behind when it comes to technology, right? They're also 1 or 2 steps behind when it comes to purchase business, right? A lot of credit unions during 2021 and 2022 did not gracefully make that transition to purchase business, right? So they're already probably a year behind when it comes to that transition for purchase business, right? And honestly, a lot of credit unions probably think just buying a realtor a cup of coffee is a way to get realtors to give them purchase business. It's not. You can't just buy a realtor a cup of coffee and think that, hey, now they're going to start sending you referrals. They're not going to send you referrals based on a cup of coffee.
Okay.
And so you kind of need this nowadays, right? As one more offering to your members, right? I think that if you don't offer construction loans, you're going to be behind the times, right? Interest rates are not going to improve significantly enough to prompt a refinance boom anytime soon, right? We're not going to have a huge purchase rush anytime soon, right? If you're not if you're not leveraging construction loans or some form of renovation type product, because a renovation product is a good alternative to refinances, right?
Mhm.
Someone may not refinance, but they'll still reno, 100%. They'll still renovate their home because they'll still want to do home improvements any day of the year. If you don't offer one of these two products to kind of offset that purchase business or the lack of refinance business, you're probably doing yourself a disservice. You'll probably get by fine with home equity. Yeah, fine. But if you really want to get ahead, really get ahead, put together a construction product, put together a renovation product, right? Whether it's a portfolio product or home style, something like that, 203K, those are good products, right? Those are going to help you come out of whatever the next 2 years are ahead of the game.
Mhm.
And maybe you don't have to rely on purchases. That's all I'm going to say.
And I just think about what's in store, being prepared. If I'm a credit union listening to this and say, hey, we've kind of been on the fence, but, listening to Peter kind of, yeah, we're missing something here. We're not getting ahead of the game. I'm tired of hearing the originators and members, ask for this program. We're going to move forward on it. What kind of advice would you give them as a good first step in trying to put something together? Because there's credit unions out there, they don't have that in-house expertise, or they don't have the muscle memory, or may not have somebody they can lean on for that type of advice. If they picked up the phone or sent you an email or got in touch, what kind of advice would you give them on where to get started?
Honestly, my personal best advice: one, it's not rocket science.
Mhm.
It's not. Construction loans is not rocket science. There's tons of training out there, right? You can look at. I cut my teeth with renovation loans, home style, and 203K. That's how I started really getting my feet wet, understanding how to do construction and renovations loans. I understood how to do those. And then I started speeding up and understood full construction products. Now, I'm gonna do a plug for Land Gorilla.
Oh,
No.
and this is not. Yeah, this is not planned.
This was not, and has nothing to do with my position at ACUMA. But before my position, I worked for a credit union. We brought on Land Gorilla, and we went through your full product development process. And we used Shannon, and he helped us develop that product. I went through his full training. I learned construction from start to finish. I had a loan officer go through that training with me. That loan officer learned construction from start to finish. I had a sales manager go through construction from start to finish. I had my ops manager go from construction from start to finish. I had a processor, start to finish. I had my whole team go through his training from start to finish. I made sure that my whole team understood through Shannon everything about laying gorillas process, what construction was, just to make sure that we were good. Like, honestly, you guys saved us, and we were able to implement our construction program with no problem whatsoever. Again, shameless plug for laying gorilla.
Thank you
And again,
very much.
but again, that's personal experience. You didn't have me on this podcast for that shameless plug, but it's the truth. It is the truth.
Yeah, no, thank you. And Shannon's amazing when it comes to that stuff. It's just a wealth of knowledge for him to be able to put that type of information, package it up, and do a lot of hand holding in the process. So thank you for that. Those are really kind compliments there. Kind of to further that, say they reach out to you, say they reach out to Landgrill, and they get the ball rolling. Part of what the decision they're going to have to make is, well, what is this opportunity size? As we look to the future, is this going to grow us, our purchase mortgage business by 1%, 5%? Like, when we look out right now and seeing one out of every, 3 homes now, 1 out of every 3 homes is new construction, right? What kind of opportunity should they be contemplating adding a construction and renovation product? Let's say, hey, they add them both, right? Not a HELOC, but a true, first position construction or renovation mortgage. What kind of opportunity do you think there is if they were to add these and be successful?
That's a tough question. I mean, again, from my experience, we put a dollar amount on it of what we want to do on a monthly basis, right? We said, from a volume standpoint, we did 10 million a month. That's what we wanted. 10 million a month. That was our volume cap, right? But I think if you have a big shop and you have, I like easy math, right? So let's say you have a $500 million shop, and that's what your annual volume is, right? I honestly think that you probably could have 20% of that could be construction, right? So that's 100 million right there, right? Mm-hmm. You probably can do a lot of volume of construction and reno. I think that's how much opportunity, especially in major metropolitan areas. I live in the DC area, right? People buy homes just to tear them down. That's all they do, right? And they're not, they're old homes in, Vienna, Virginia, that are literally tear down homes they buy for $700,000 and they build $200 million homes or $2 million homes on top of that, right?
$200 million home would be a great home.
That would be ridiculous. But that's what they do, right?
Yeah.
And it's an excellent opportunity for someone to kind of get good volume if that's what they want to do, right? But then on the flip side of that, let's talk about the affordable housing opportunity, right? In these major metropolitan areas where there is a high cost for the members that can't afford that, and they have to go further out. Same thing using DCS, and same thing where I live outside the DC metropolitan area. You go 1 hour out, there's plenty of land out here where a member or a borrower can buy a piece of land and build a house for $400,000 with no problem whatsoever, quite easily. I think there's plenty of opportunity where 20% of your volume could be construction and renovation.
The other thing to consider, so you're a credit union, you're listening to this, you're trying to size up the opportunity, and you may have not been collecting and marking applications correctly to kind of get some metrics around it, but there's this other indirect opportunity that needs to be considered, and that is member acquisition as well as member retention, right? And it's not just the mortgage product that they're getting, but it's the other products that they may be opting into through the credit union, be it credit cards or auto loans or other products that they're considering, has a significant impact. And when that member leaves to go get their construction or renovation loan somewhere else, be it another credit union, bank, independent mortgage lender, you name it, Bob down the street that's going to lend them the money because nobody else, whatever that situation is, that's a not a liability, but that's an expense to the credit union. Losing that member and losing the ability to serve them or serve the community in that way. That there's some indirect opportunities as well. You mentioned affordable housing. This will be the last question that I give you around affordable housing is, why is affordable housing important to credit unions right now?
Yep. Credit unions are, in my mind, the last true community-focused organizations or financial institutions left in this country, right? We are dedicated to the communities that we serve. And if we follow that creed, right, we are doing our members and the communities a disservice if we do not focus our attention on solving that crisis. And I'm calling it a crisis. It 100% is a crisis. Again, I said it earlier, and we've discussed it in the past. When you look at big box builders, they're not building homes that are, 400,000, 200,000, made for that lower to middle class, if you even call that, if that even exists anymore, right? They're building homes for that upper middle class, right? That's why it's such a big deal. That's why affordable housing is such a big deal, and that's why credit unions need to pay attention to it. Again, we are community minded, and if anyone is going to solve the affordable housing crisis, it's going to be a credit union. And again, that's it.
I love that subject. We got to put together a whole podcast to just completely dedicated to affordable housing and solutions that are out there, and just a lot of great work to be done there and a lot of conversations to be had. And Peter, I can't thank you enough for coming on the podcast today. Really, really appreciate it.
Thank
you.
you.
This little segment to wrap everything up, but we call it the lightning round. I'm going to ask you a couple questions. I think you know that we do this, and look forward to hearing your answers. So if you're ready, I'll go ahead and shoot.
Go for it.
Would you ever get a construction loan to build your own home?
100%.
100%?
100%.
Man, that was an easy one. Favorite product that you've recently discovered that you can't live without? Something you'd recommend to friends or family?
Uni pizza oven.
Really?
100%. 100%.
Really? Have you ever tried the Ember mug? I should get paid by these guys, the chain, so I want to recommend it all the time.
Well, I am not sponsored, nor am I endorsed by Uni Pizza Oven. I have not tried an Ember mug, no.
Oh, got to try them. I will send you one. I got one with little Lane Gorilla logo on it. I'll send
please do. Please do.
All right. And for the last and final question, this is kind of made its way into the rotation. I love this question. If you could just snap your fingers and change one piece of regulation, whatever it is, as long as it's related to housing, what would it be?
Good. Get rid of it.
Completely cut it off. Gone.
I mean, we invested a lot of money in it. But I mean, I think the papers are pretty. I do like the LE and CD. They are pretty. But it's still very confusing. Still head scratchers. I'm gonna go with it. True. So, yeah. No, wait, no. LO comp.
LO comp.
LO comp.
Well, here, now we're going to have a follow-up to that. Why LO comp?
I honestly think there are some components to it that prohibit the lender from, if you have a bad actor loan officer, there are some components to LO comp that prevent you from taking action against that loan officer. And that's it.
That's great. Great enough. Great enough. Peter, I mean, absolute pleasure you being on the podcast today. I am going to follow up with you about one dedicated to affordable housing. I think that's really exciting me, but thank you so much. If people wanted to get in touch with you, what's a great way for them to reach out? Are you on LinkedIn? Can we get your email address? Post it here with the podcast.
LinkedIn or peter@acuma.org.
All right. Fantastic. Well, Peter Benjamin, everybody, with ACUMA, and thank you so much for being on the podcast. Look to having you back soon.
Sean, thank you very much.
This podcast is intended for educational and informational purposes only and does not replace independent professional judgment. Land Gorilla Inc. makes no representations, warranties, or promises for and disclaims any express or implied warranties related to content. Before acting on any information, you should consider the appropriateness of the information as it pertains to your unique business needs.